Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and every week I come to you guys here live on YouTube on Wednesdays to let you know what is going on in the market. I'm giving you guys the temperature that is out there, what is happening. We're talking about all of the current events, where are interest rates. Today we're going to be talking about the Fed meeting that just wrapped up about 2 hours ago. What does that Fed meeting mean for you? What is the new increase in interest rates? What's going to happen with home buying? We're going to get into all of that today here on this show. I do want to remind everybody that this is an interactive show, so you are more than welcome to put your question into the feed. Ask me. I'm going to read it out loud. I'm going to answer it for you. We take this show and we send it off to the radio stations every week. And then if you are listening by radio, you are behind. You are not listening to the most recent show that we've done. So I do want to encourage all of you, if you'd like to be part of the show, you want to be as up to date as you possibly can, you want to see me do this thing live, you have to text the word mom to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. You're going to get one text message per week that just lets you know that we are live. It is going to give you a link to go ahead and click on to join us on YouTube. Now, if you prefer Facebook or you prefer Twitch, you guys can watch us there as well. We're streaming it live to all 3 platforms at one time. I can see that Espolen Locos jumps on. He says, hi, Debbie, and hi there so much. Thanks so much for joining in. I said last week that you were my biggest fan, and I love that you jump on every week during the live show. So thank you so much for doing that. Please remember, you guys, you can ask your questions and you are going to get your answers if you are watching me do this live. So once again, text the word mom to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Now, that is the same phone number to call our office as well, guys. So if you have any questions, you want to know what can we do for you with your own personal situation, then you've just got to reach out and give us a call. You can book an appointment right on the website. That's mortgagemomradio.com, and you will get a call at your appointment time. I can see that Leslie jumps on. She says, hi, Debbie. Hi, Leslie. And Heidi jumps on as well and says, hi, Debbie. So I'm getting tons of hi, Debbies today. I love that you're all here. Today, we're going to be talking about the announcement that just came out about 2 hours ago from the Federal Reserve saying that they have increased interest rates by 0.25%. So we're going to talk about what that means for you. We're going to talk about where you're going to feel that. We're going to talk about what that's going to do to mortgage interest rates, because it's probably not what you're going to expect to hear. So everybody stay tuned. My text message is going to go out in about 1 minute. So I want to be able to give some time for everybody to be able to jump on and join the show. We're going to take a super quick commercial break and we'll be right back. Hi, this is Debbie Marcoux, host of the Mortgage Mom Radio Show. And as you know, I'm always trying to make sure that my listeners are saving a buck. Well, there's a new store in town. It's called Runaway Soul. You can go to their website, runawaysoul.com. What do they carry? Well, they carry all of those hard-to-find sneakers, Nikes, Jordans, Adidas, as well as hats. So if you're a sports fanatic and you love those baseball hats, check out their team hats that they have online. And they're also carrying collectibles. So Hot Wheels, Legos, Funko Pops. You name it, they've probably got it. So go to their website, check them out at runawaysoul.com.
She's the mortgage mom.
Hi, this is Debbie Marcoux, the mortgage mom. Did you know that interest rates are down and home prices are up? Well, this is a great time to consolidate that first mortgage that you have with that home equity line of credit or second mortgage that you might have outstanding. If you want to know more, you want to know what that might look like, you want to know what those payments might be, what kind of interest rate can we get you? Well, give us a call. You can reach us at 844-935-3634. Or hey, go to our website, mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Business Oversight under the California Residential Mortgage Lender Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida 76508, Georgia 69178, Illinois 031.0058339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington 237926.
All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and today we're going to be talking about the Federal Reserve increasing interest rates by 0.25%. So as you guys know, again, you guys can put your questions into the feed. I'm going to read them out loud. I'm going to answer them for you. If you're here, let me know that you're here. I've got a ton of hi Debbies. Lori Weir got on. She says hi, Debbie. Heather jumps on. She says hi, everyone. And we got Cole. I've never seen your name before, but he says, dun, da, da, da. So we're going to actually be talking about, yes, they increase the interest rates by 0.25%. And what does that mean for you? Now, the first thing that I'm going to do is I like for you guys, I like for all of my listeners to have the full story, all the information, and the accurate information. So the first thing that I'm going to do is I'm going to actually read the press conference. So this is the transcript of Chair Powell's press conference opening statement for February 1st, 2023. So I'm going to read this for you guys, and so that you can actually hear exactly what he is saying, and then from there we're going to discuss what does this mean moving forward. So it says, "Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing, as we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we have taken forcible actions to tighten the stance of monetary policy. We have covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance from some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. With the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months shows a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress towards our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions. So that was actually coming directly from Federal Chairman Powell, Jerome Powell. That is the statement that he gave saying that he was raising those interest rates by 25 basis points. So what exactly was he saying in that statement that he made? So number one, we are starting to see the effects of all of the increases that they have done, which is fantastic. I'm going to actually run a quick little itty bitty segment that I did back in December at the last federal increase that they did. So the last meeting that they had in December of 2022, I did the show talking about, the increase. They increased it only by 0.5%. So they didn't go up by the full 0.75% that they had been doing throughout the rest of, earlier that year of 2022. And so we're going to re-roll that piece so that you guys can get an idea of where my head was at that increase and at that meeting. And then we're going to talk about this meeting. But in essence, what he's saying is we've got to stay the course. We have to keep increasing these interest rates for a little bit longer. We've got to see where it takes us, but we are seeing that things are coming down. So our highest point of inflation was at 9.1%. As of December, we had gotten down to 7.1%. That was a pretty good change very, very quickly. Although they changed our interest rates very, very quickly and they've kicked all of us in the butt and they've killed us, they are seeing those trends come down. And I'm going to talk a little bit more too about where are we at with inflation right now in February 2023. So basically we just finished January. So where are we at now? Are we still 7.1? Are we seeing that come down further? Where do I think that they're going to go with the next Fed hike? We're going to talk about all of these things today. And again, I want to remind everybody, this is interactive. So please feel free to put your questions into the feed. All that I can do is give you my honest opinion. It is an opinion. I am not a financial advisor. I do not have a crystal ball, but I am on top of it. I am in this. This is my business. This is what I do for a living. So I can give you my opinion of what I think that we are going to see and what we should all expect moving forward. And how does that tie into mortgage interest rates? How does that tie into housing prices? How does that tie into you purchasing a home? That's what this show is all about. I can see while I was reading that, Gustavo got on. He says, nice hair, love it. Gustavo, thank you. I always love a compliment. Cole says, I was on here a few days ago. Cole, thank you so much for joining. I love that. I'm sorry I didn't recognize the name, so I apologize, but I do love it when people do watch and they jump in at each episode. It truly does help us. It helps us with views. It helps us with algorithms. And I just love having the followers. So thank you so much. And Armando jumps on and he says, thanks for reading this update. Armando, you are very welcome. Again, I like to bring you guys the information, the real information, exactly what was said, not what somebody is interpreting in an article about what was said. We're going to interpret it our way, and that's what this show is all about. But I do like to bring you guys the real information. So I'm going to run that clip really quick of what I said in December 2022, and then we're going to tie it to what happened just hours ago today with the Fed. So hold tight. Here we go. All right. So welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And today we are talking about the Federal Reserve increasing interest rates by 0.5%. And I know it's not fun to hear that they increased it by 0.5, but I'm actually very excited that it was only 0.5. So over the last few meetings that we've had, I want to say the last probably 4 or 5 meetings, and I would have to go back and research it, so don't hold me to that number. But for many meetings now, they have actually been increasing that prime rate by 0.75% every time that they have gotten together for a new meeting. They get together and they do meet every 6 weeks. So in 6 weeks from today, I'll be on here and I'll be talking about the next Fed meeting and what are they doing? Are they increasing? Are they not increasing? How much did they increase by? My hope is that because we went from 0.75% increase to 0.5% increase, the next time that they increase that Federal Reserve prime rate, maybe we will only see 1/4. And maybe the time after that, we won't see them increase at all. And they will hold things steady, which is really great news. That means that things are turning around. Inflation is coming down. Things are starting to normalize. This is very, very good news. It's a very great outlook. It is something super exciting to take into 2023. And talking about 2023, I think the exciting part about this is that we can see the improvements that have been happening. We can see that all of the pain and suffering that we've all been going through is hopefully turning things around. I know that they came out with inflation numbers about a week ago, and they did say that things were starting to come down. It was on the decline. So this is all very, very good. This is all very positive news. All right, so if you guys were listening to that clip from back in December of 2022, you can see, or you could hear that I was saying, we know that they increased interest rates. We know that this isn't fabulous news for everybody. If you have a home equity line of credit, if you have credit card debt, if you have something that is directly connected to that Federal Reserve prime rate, which those items are, you're going to feel it in your pocket with that raise. But that 0.5% back in December was positive news, because that meant that they were loosening up. They were slowing down those increases. That meant that we were on the mend. Things were starting to improve. They could see that things were turning around. I was hoping back in December of 22 that we would see the next federal meeting with maybe only 0.25% rate hike, which is exactly what they did today. Further saying, that this means that they're starting to see these significant changes. They're starting to see things move, turn around. They don't want to take their foot off the pedal just yet. They are probably going to increase that interest rate at least 1 or 2 more times, but they are doing it in smaller increments, which is going to help us to not get that massive blow to that face, that slap across the face that nobody was expecting. It came out of left field. Everybody was buying homes at interest rates at 3%. The economy was just going through the roof. People were spending, people were buying. Everything was fantastic. Car loans were, at 0% for 5 years, and now all of the sudden things changed, and they changed fast, and they changed, almost overnight. They 4.5%, they increased the interest rate in 1 year's time. So the fact that we're not going up by 0.75% at each meeting right now, the fact that we only went up 0.5 in December and now only 0.25 right now, this is positive news. This is very, very exciting as far as I am concerned. I know that we are on the mend. I know that we are starting to see things turn around, and I know that we are just around the corner from things breaking. All of the articles and things that I have read are saying that they do believe that by the end of this year, 2023, which I have mentioned in numerous shows that I've done, that they do believe that they'll have the foot off the gas and that they will actually possibly start to reduce those rate hikes, and maybe even reduce that prime rate a bit. Maybe they'll drop us by another quarter, maybe by the end of the year, by 2023. So this is all very, very positive news. Not great news that interest rates are going to go up and that you're going to feel it in your pocketbook, but great news that the economy is starting to show those signs that it needs to show to get things back under control. So I really, really do like that. We are going to take a super fast break. I do again want to remind everybody, this is interactive. Ask your questions, put your comments in the feed. I can see that my dad jumped on while I was talking, and he says hi. Put your questions in the feed. I'm going to read them out loud and I'm going to answer them for you. I'm more than happy to do that. It's interactive here, guys. And anybody listening by radio over the weekend, just remember, you're behind. You're probably a show or two behind. So if you're listening to this at a later date and you wish that you had known about this right away, you wish that you had been able to be part of the show, you wish that you could have asked your questions immediate right on the spot, all you got to do is text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Just the word MOM, MOM. That is it. Don't put opt me in. Don't put, subscribe me. Just MOM. That is it. That will get you subscribed. One text message per week is all you will get to let you know that we are on and that we are live, so that you can click the link and you can join us via YouTube. So stay tuned. We'll be right back. We're going to keep going on this show. Hi, this is Debbie Marcoux, host of the Mortgage Mom Radio Show. And as you know, I'm always trying to make sure that my listeners are saving a buck. Well, there's a new store in town. It's called Runaway Soul. You can go to their website, runawaysoul.com. What do they carry? Well, they carry all of those hard-to-find sneakers, Nikes, Jordans, Adidas, as well as hats. So if you're a sports fanatic and you love those baseball hats, check out their team hats that they have online. And they're also carrying collectibles. So Hot Wheels, Legos, Funko Pops, you name it, they've probably got it. So go to their website, check them out at runawaysoul.com.
Debbie Marcoux, licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Have you been thinking about buying your first home and you just don't know where to get started? Well, book a phone consultation with either one of my loan officers or even me. How do you do that? Well, go to our website. Go to mortgagemomradio.com. Right there, you'll see a book phone consultation and get on the books. Talk with us. Let's get you started from beginning to end. We'll walk you through that process. That's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and we are bringing you guys all of the current, up-to-date information that is going on in the market, real estate, mortgage, and everything else financial that is all in play, and everything that makes where our economy is at today. We make sure that we give you guys the temperature checks that you need to keep you in tune. So before the break, I actually had said that car rates, right? So talking about the Fed increases, how things have changed, car rates in general, right? So if you guys remember back to 2019, 2020, 2021, it was pretty simple for you to walk into a car dealership, buy a car. Well, it wasn't that simple. If we all remember the car shortage, we were all paying over a price to buy a car. We were giving them over sticker, but the interest rates and the financing were fabulous, right? You could very easily get a 1.99, a 2.99, a 0% financing rate for 3 years, 4 years, 5 years, right? So where have things changed? The Federal Reserve has increased by 4.75% since that time, and so where have those things changed? So I actually pulled up some information that's giving me the current interest rates for car loans. So just to give you guys kind of a temperature check, it says interest rates for auto loans have risen since the Fed began hiking rates. Here are the latest average interest rates for auto loans according to bank rate data. So it says a 60-month new car is at 6.18%. 48-month new car, 6.17%. So they're not giving you much of a break there to finance it for less time. A 48-month used car is at 6.83%, and a 36-month used car at 6.49%. So substantially higher just in order to buy that car and to get it financed. Now, interest rates for the 30-year mortgages. So I'm going to read this one for you guys to give you a little bit of history and detail of where we've been, and then we'll talk about where we're going. So interest rates today for a 30-year fixed rate mortgage, as the Fed hiked interest rates, 30-year fixed rate mortgages shot up in 2022 as the Fed hiked interest rates. At the start of last year, so at the start of 2022, the average 30-year fixed rate hovered around 3%, according to Freddie Mac data. Now they're double that. However, they've come down from November's peak of over 7%, the highest level since 2002. So that is one of the things that I've talked about over the last couple of weeks, is that we are in a fantastic sweet spot right now. We are down substantially from where our peak was, and it's a great time to take advantage of purchasing a home or refinancing. So we have actually seen quite a drop. Interest rates are on average in the low sixes, easily can be bought down into the fives. So we are in a very, very sweet spot right now if you've been thinking about going out, looking at homes, and purchasing something, it's a great time. And we're going to talk more about that as well. So the fall in mortgage rates is spurring demand from home buyers. So that was one of the things that I've talked about again over the last couple of weeks. As I told you guys, as soon as interest rates came down just a little bit and homes have been sitting on the market for a while, which they have been, this was going to spur the pre-approval process and people getting back on the street and starting to buy homes again. So again, don't be behind the 8 ball. Get yourself your pre-approval started. US Today's Bailey Schultz reported citing recent data from the Mortgage Bankers Association. The housing market cooled tremendously over the last year from the pandemic era housing boom the Fed's low interest rate environment ignited. Relief for homebuyers in 2023, mortgage rates at lowest levels since September. Mortgage rate buy downs, they're on the rise as home buyers cope with high interest rates. So we've talked about all of this in past shows, right? Buying down the interest rate to make the housing more affordable. If you need to move, you need to buy, you've got to, at some point, you can't keep that goal on hold. You've got to just get out there and do it. It's a great time to do it right now with interest rates down. So this is all really good stuff. I did read a little bit that it says that we're going to really see the Fed stop the increases and even start to give us some breaks once they start to feel the jobs and the actual slowing of people spending on restaurants. And we see the jobs slowing in the nursing fields. So they're taking fields that are still right now very, very active. Increases in pay are still going on. There's still shortages in jobs. People are still shopping, buying, going to restaurants, eating out, and they're still short on workers in those areas. So, when those things start to slow down is when we're going to start to see them back off. And I'm sure that just like every other business out there, food costs rising are going to make things more expensive at restaurants. If things are more expensive at restaurants and people are going to slow down and stop eating out, as they stop to eat out, then we're going to lose some labor force in those sectors. So things are moving, things are turning over, things are changing pretty rapidly. And I do believe wholeheartedly in my gut that by the end of this year, they're going to be done with their increases and we might even start to see some decreases. So that is positive news. Now, with the news of the Fed increasing interest rates, what did that do to mortgages? So a lot of times, people are under the assumption that if the Federal Reserve prime rate increases, then everything increases. Mortgage rates increase, car loans increase, student loans increase, equity lines increase, personal loans increase. That is actually not the case. So with the Federal Reserve increasing the prime rate, there are certain types of loans that are directly connected and tied to the Federal Reserve's prime rate. So things like a home equity line of credit that is adjustable rate mortgages, student loans that are adjustable, car loans that are short-term. So much of your short-term financing is directly connected to the Federal Reserve prime rate. So those credit card monthly payments are going to go up. Those minimums that you see this month are going to be higher next month. That equity line of credit that you took money out to go rehab the house or do an addition or add that ADU that you've been wanting, that is going to become a higher interest rate and a higher monthly payment for you next month. You're going to see those things change almost immediately within a 30-day period. Now, things like mortgages and savings accounts may actually see some benefits. So this is where I get very, very excited. And again, I try to get you guys out from behind the 8 ball and in front of it, get your pre-approval started. So with the news that they were increasing interest rates, we actually quickly saw the mortgage-backed securities market, the treasuries market actually went up and they actually got a little bit better. Why is that? Why exactly does that happen? If the prime rate's going up, why would we see mortgage rates actually dip a little bit and get a little bit better? So with long-term investments, if you guys have a savings account, if you guys remember back, to the 90s and the 2000s or even the 80s, if you had your money in a savings account, which was or a CD, the interest rates that those would yield for you were much higher than where they were last year, the year before, really anywhere from like 2015 on, when interest rates have been pretty low. The Federal Reserve has kept their number pretty low. You have seen you're not getting a whole lot of interest on those long-term savings types of vehicles, right? And it's because there was nothing to give. They weren't charging any money to borrow money. So there was no money to give you in interest or earnings on those savings accounts. So now you're going to actually see in your savings accounts, those interest rates get a little bit better. And many investors are going to take their money out of short-term investments and they're going to put them into something that is more stable, something that is more secure. So putting it into a 30-year mortgage-backed security is more beneficial for them than putting it into something short-term that they're going to see very quickly dip, up and downs, right? And we're going to see things dip. I mean, we saw the stock market today take a dive as mortgage interest rates are actually getting better on the news that they increased interest rates from the Federal Reserve. So I do actually think that we're going to have a pretty decent year with interest rates. I do think they're going to continue to raise the interest rate from the Federal Reserve by another 1/4%. We already got a really nice little dip from where our highest levels were in September of 2022. I think that this most recent announcement that just happened today, we'll have to see obviously how that plays out over the next week or so. But I do actually think that we might see a little bit more as far as a little bit better interest rates, a little bit lower even than where we've been over the last few weeks, which is very, very good. And who is it good for? Well, it's good for everybody, obviously. If you're buying a house and you're getting brand new financing that's giving you a lower interest rate than what you could have secured, back in September. But hey, if you bought a home back in September, October, November, or even if you bought a home really from, I would say, June of 2022 through, I would say, end of November of 2022. So if you bought a home from June to November of 2022, there is a very good chance that interest rates have come down a point, maybe even 1.5%, that you could possibly benefit right now from doing a refinance and being able to drop that interest rate to lower that monthly payment. So definitely reach out to us at the office. Let us know, what you've got going on. Make sure you've got your mortgage statement in hand so that we know your balance. We know the interest rate that you have. Remember what you bought your house for. How much did you purchase the property for? And then we can very, very quickly run some numbers for you to see if that refinance might be beneficial. Now, who else could that be beneficial for? Well, if you were trying to get pre-approved back in 2022 and you found that you got priced out of the market and you could no longer afford what you were hoping to buy, well, if interest rates have come down by 1.5%, you could easily be qualifying for more. So it's a very, very good time to reevaluate that pre-approval again and see where you are at, see what you can qualify for at today's prices. So all of this, to be honest with you, is very positive news in my opinion, even though it sounds like it's very negative. I'm super excited. I'm riled up. I feel like 2023 is going to be a fantastic year, and I cannot wait to help all of you. If you have an equity line of credit right now that you took out in 21 or 22, you are probably feeling almost a double monthly payment from what you initially signed up for. It really might be time for you to give us a call to discuss possibly doing a refinance to roll those two loans together into one to try to help you to reduce your monthly payment. So these are things I haven't been able to talk about literally in like 18 months. And so I am so excited about it that we have that opportunity today. And this might not last. This could be, like I said, a sweet spot. We're in a really good spot right now where we saw a very quick reprieve from where our highest level levels were. You know, many experts are saying by the end of this year, we should expect to see mortgages at 7.5%, maybe 8.5% in interest rate. I don't know if that's going to play out. I kind of feel like we might see 7.5% by year end, and then they're going to start to break a little bit. So this really might be a sweet spot that if you are in a bind, or you've been thinking about consolidating, or you've been thinking about buying a home, it's a great time to jump in and to do that. So I can see that Tom jumped on with me. He says, hi, Debbie, Heidi, do you guys do manufactured home loans on permanent foundation on owner-owned land? And Tom, that is a yes. Yes, we can do that for you. There are stipulations to manufactured properties. It is not just us and our mortgage company that we work for. It is actually across the board. They all have the same rules and guidelines set forth by FHA, VA, Freddie, Fannie. Basically, the home has to be built. It has to be newer than 1986, I believe. And I know that Carrie is on here watching, and she is my manufactured housing specialist. So I'll let her actually correct me if I was wrong. She'll put it into the feed. But I do believe that it has to be newer than 1986. It does have to be a minimum of a double wide, so it cannot be a single wide. It does have to be permanently affixed to the foundation. So they do have to have gone through all of the HUD requirements of permanently affixing it and getting their HUD tags to change it from personal property to real property. And there are a couple of other things that go along with manufactured housing. But if it is on land that you own and it is permanently fixed to the foundation, then you are absolutely, you should be good to go as far as financing. Now, one thing about manufactured homes that a lot of people don't know, you cannot get a loan against a manufactured property for an investment, so they will not allow investment properties. So you do need to be occupying the property to get that loan. That is a really important factor that many people don't think about or talk about, and you don't know about it. And you're thinking, I'd love to go grab a manufactured property, out by the river for our summer home. We'll rent it out in the middle of the summer when we're not using it. It'd be a great little income piece. And you know what? You're right, but you're not going to be able to get that financing as an investment on a manufactured home. So definitely keep that in mind. Nora Juarez jumps on. She says, hi, everybody. So Nora, thank you so much. It's great to see you jump on and join the chat. I am going to take a super quick break, and we'll be right back. Hi, this is Debbie Marcoux, host of the Mortgage Mom Radio Show. And as you know, I'm always trying to make sure that my listeners are saving a buck. Well, there's a new store in town. It's called Runaway Soul. You can go to their website, runawaysoul.com. What do they carry? Well, they carry all of those hard-to-find sneakers, Nikes, Jordans, Adidas, as well as hats. So if you're a sports fanatic and you love those baseball hats, check out their team hats that they have online. And they're also carrying collectibles. So Hot Wheels, Legos, Funko Pops, you name it, they've probably got it. So go to their website, check them out at runawaysoul.com.
Debbie Marcoux is licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Hey, if you're a homeowner, you've probably got some equity in your home. Do you have debt that you need to get rid of? Well, give us a call. Let us take you through that blended rate calculator that I always talk about. Let's determine if it makes sense for you or if you should keep what you have. How do you do that? Well, book your phone consultation. Go to our website at mortgagemomradio.com and you can book your call right there. Once again, that's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and I'm bringing you guys the education and information that you need about all things real estate and mortgage each and every week right here on YouTube. We're doing it live. It gives you a chance to interact, ask your questions, and I'm going to answer those for you. The best way to know that we have gone live is to text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number before. Best way to know that we have gone live. I promise I do not spam you. I do not send you text messages other than one time every week on Wednesday, right as I start the show with the link to the YouTube channel so that you can jump in and join. So I definitely encourage all of you to do that. If you haven't done it before, text the word MOM, M-O-M. It's spelled the same forward and back. Don't add anything else. No opt-in, no subscribe, nothing, just the word MOM. Now, one thing I do want to really quickly make sure that I let you guys or remind you of is that we do have a Mortgage Mom Radio phone app that has got all of the tools and information you could possibly need to at your fingertips if you're thinking about purchasing a home, refinancing a home. You want to know what you might be able to afford. What would you be approved for as far as a mortgage is concerned? These are all calculators. These are giving you estimates. So obviously, you're going to get the best information by talking to somebody on the team and having a real person do it for you. But these are great tools if you don't feel like you're quite there yet, but you're starting to explore, you're trying to get some information, you're wondering what a refinance might look like if you were going to consolidate that first and second mortgage or that equity line of credit into one new loan. Kind of gives you that opportunity to run those numbers. The Tools app is awesome. You can watch YouTube right through the Tools app. You can email us through the Tools app. You can call us through the Tools app. You can do pretty much everything that you need. This app is not in the App Store. I do have a Mortgage Mom Radio phone app that is in the App Store. That is for somebody who is working with either me or my team to do their loan. So if you have, starting your loan application, uploading your loan documents, moving through the system, signing disclosures, working through the actual loan application, that is what the app on the App Store is for. The Tools app is for somebody that wants to be able to run a payment if they're window shopping on, Redfin or Realtor.com, whatever your favorite app is to window shop. If you're out driving around and there's an open house and you're wondering what that house might be worth and what would that look like in a monthly payment, it gives you all of that information. It gives you that availability to do that with the click of fingers. It's going to calculate for you mortgage insurance. So if you're not somebody with 20% down payment and you don't know how to calculate mortgage insurance, which most people don't, it's going to calculate that for you. If you are a vet and you are going to use your VA financing, there is what's called an upfront funding fee that gets financed into your loan balance. It is going to calculate that for you. It's going to ask you if you are disabled or not, if you are a first-time buyer or not, as far as a veteran goes. If you are doing an FHA loan, it's going to calculate the upfront mortgage insurance and it's going to calculate the monthly insurance. These are things that you would not typically know how to do. These are things that looking at Realtor.com and looking at the calculators that they're showing you what that property is going to be in a monthly payment, that's why they're never right. Every single person is going to get a little bit different type of payment. It's going to ask you for your credit score. It's going to do all of that for you. If there is an input section that you don't know how to input to get that calculator to run, all you have to do is click the Email Debbie button in the app and ask me, and I'll tell you exactly what to input so you can get those numbers all on your own without being hounded or phone calls or anything else. So it really is a great tools app, and if you want that app, you're going to text the exact same phone number, but you're going to text phone app. So PHONE space APP. So phone app. Text the words phone app to 844-935-3634. Again, that's 844, we lend for you. WELEND and the number 4. It is a fantastic app. You guys get it. What you're going to do when you text the word phone app, words, phone app to that number, you will get a link texted back to you. Click on the link, save it to your home screen. You now have the Mortgage Mom Radio Tools app at your disposal, and I really do hope that you guys use it and enjoy it, and then reach out to me and my team so that we can help you get things started. Now, I do want to, before we finish up the show, I do want to talk to all of my home buyers out there. I want to remind you guys of where we are at. Again, temperature check with the market. Where are we at today? Why do I keep telling you that you should be working on your pre-approvals? Okay, so as we mentioned, mortgage rates dipped quite quickly. High September of 2022, we were in the 7% range. Now, February 1st, 2023, we're in the low 6 range. Easily can be bought down into the 5s. Sellers, many sellers, things cooled off. If you've been selling your home, you've been listed for sale, I know you can agree with this. You've been sitting on the market for quite some time. 30 days, 60 days, 90 days, we've had homes that we've seen listed for sale for 100 days and they're not sold. When a seller is selling in a market like now where they need to sell, they are going to do things to try to get the home sold. So this gives you that better opportunity of being able to ask for things like closing cost credits. Those closing cost credits are going to help you to buy your rate down, pay for your closing costs. When you've got a seller that's been sitting on the market for quite some time, they're not going to put their nose up to your offer. If you're doing a 0 down VA loan, you might be able to get your offer accepted with a 0 down as a vet, VA loan, 0 down, and you might even be able to get the seller to give you a credit to pay for all of your closing costs. So you literally are getting into this home for nothing, no money out of pocket. I mean, that's fabulous. FHA buyer, 3.5% down payment. In 21, 2020, even early 2022, when the market was super crazy, there were tons of multiple offers on every house. If you had walked in with an offer with a 3.5% down financing, you were probably not getting your offer accepted. Now's your chance. You can do that. As things turn, as economy improves, which is exactly what we've talked about throughout this entire show, you're going to see many, many home buyers who put their home search on hold when interest rates hit 7%. They got priced out of the market. They could no longer afford that mortgage for that $700,000 property that they wanted to buy. So now things are coming down. And as rates continue to come down, even if they go back up, but at the end of this year, come down even more. Again, these are my predictions, the Mortgage Mom. But as this happens and as the market heats up, you're going to be back in to an area where there's going to be a lot of people trying to buy the same home. And there's going to be multiple offers. And you're going to find that it's going to be more difficult to get an offer accepted. So get on top of it, guys. If you've been thinking about buying, if you were trying to buy and you gave up, it is the time to pick up the phone and revisit that pre-approval. Find out where are you at today? What do numbers look like today? Hey, maybe you're still not there yet, but you know what? Maybe you're there and you're ready. If you have been putting off a refinance, if you have a home equity line of credit and that interest rate and that monthly payment just keeps climbing on you, call us and talk to us about a refinance. This could be a fabulous time. So I do hope that you guys enjoyed the show. I hope that I gave you tons of information today. If we don't have any other questions, I'm going to sign off and say see you later, but I will wait one more minute for you guys. If anybody else has a question that they want to ask, I am more than happy to answer it for you. But to summarize, the Federal Reserve did increase interest rates today by 1/4. Although that sounds horrible and awful, my spin on it, the Mortgage Mom, is that it is actually very positive. We've seen them go from doing 3/4% rate hikes time and time and time again every 6 weeks to 0.5%, now down to 1/4%. So I am seeing the light at the end of the tunnel. I am super fired up. I am telling you out there that you've got an opportunity to purchase. You have an opportunity to refinance. We are below the interest rates where they hit their highest peak in September last year. So this is a very positive and exciting show. I hope you guys all enjoyed it. I'm going to keep bringing you guys all this great stuff every single week. I hope you tune in. I hope you keep following along. And please share the show. If you have anybody that you know who this could be very beneficial for, please share it with them. The more that you guys do that, the better that it is for me. It does help me. It helps my team, and it helps me be able to continue to bring you guys this very valuable information. I hope you enjoyed it, and we'll see y'all next week. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the Pick up the phone and call mom.